Well, good afternoon, John. It's good to see you. We're recording this on Thursday afternoon. Markets just closed at, if not an all-time record, then very, very close to an all-time record. John, this is the week that we saw the RBA sit on its hands and not cut rates like the market was expecting. Were you disappointed?
Oh, look, I was a little surprised. I mean, obviously there's a few issues which have developed. When they hinted they were going to cut aggressively a few months ago, they were concerned about the tariff issue and how it affected markets and the world economy. That issue around tariffs had drifted. The issues had drifted away a little bit. And no sooner had they announced no cut than Trump was back on the front foot again announcing tariff issues. So I think it's foolish of the central bank to run their monetary policy based on what Trump says. However, the other issue I think was the currency. The currency was quite weak before the announcement, and a weak Australian dollar does affect inflation, which the Reserve Bank says it's trying to manage. So I think that became an issue out of the blue. And their other comment that they want to see more evidence that inflation is under control with the quarterly numbers for June. I don't think there's going to be any surprises in June because the government cost of living policies are in place through that quarter. So I don't really think that's a strong argument either. Probably the bigger issue, Paul, apart from the currency, is the fact that if we cut interest rates and we are gapping well below American cash rates, and that leads into the currency discussion. So I think that's probably more an issue. And the longer America holds its cash rates at where they are, which is a discussion between the Federal Reserve and the Trump administration, as we know, Jerome Powell is digging his feet in. I think the Australian central bank's going to have to put its big shoes on and say, look, let's decouple from the American situation and manage our economy appropriately for the benefit of Australia.
There were a couple of interesting things to observe in Michelle Bullock's press conference after the decision. Obviously, they referred to the 9 votes. 6 were in favour of sitting put at 3.85. 3 votes were in favour of cutting. And she also emphasised that she doesn't place much emphasis on monthly figures. It's really the quarterly CPI that they want to see. I mean, do you think that there's kind of a lack of transparency there, not disclosing who voted what and so on, or do you think that that's fair enough?
Well, my first thought, Paul, was why didn't they just cut it by 10 basis points to bring it down to 375, which get it back to normal? So if you're sort of uncertain and you're sitting on the two sides of the fence, so well, why don't we do a little bit of an adjustment in the middle? And that would have sort of appeased the market and said, look, we are in a cutting regime, we're just doing it slowly and we're going to monitor the situation because the situation, particularly in America, is so uncertain. I don't really want to go into who voted what. I think it gets down to an American situation if you do that. And I think then all of a sudden those people who vote, then they get a voice. And we don't want 9 voices on the Reserve Bank. We want 1 voice. I think it's probably good policy. So I said earlier, I think the inflation numbers are pretty well known. Whether they're the true cost of living is the issue, because as we know, we've got the government policies with energy in particular. So I don't think anything surprising is going to come out of it. I just think the Reserve Bank was really trying to buy time and see whether America would cut. They'd be a lot more confident cutting if America started cutting. And that's where it sits at present. A slowness in cutting the interest rates, gapping the interest rates away from America is going to put pressure on the currency and going to create inflation itself. So I think that's the bigger issue.
Mm-hmm. And Jerome Powell at the Fed is under increasing pressure from Trump to lower rates, but he's quite firm in his view that they can afford to wait. So we'll see what develops there. Michelle Bullock also did emphasized that there were some inflationary pressures still in the system. I think she singled out building costs and building products, one or two other items. Do you see that there's still inflationary pressure, surprises to come? And she also said that one of the reasons why inflation didn't look as bad as perhaps they had feared was because of government subsidies. So if you take that out, perhaps the picture isn't as rosy as we would like to think.
That's the point. I mean, we have government subsidies and trying to hold down the cost of living, but the cost of living is not the CPI. And that's where the disconnect is. Australia is quite unique, and it's madness in this country. We index toll roads, for instance. Every quarter in Sydney, the toll roads go up by 1%. So inflation will go to 2.5%, and we increase toll roads by well over 4% per annum. I mean, it's a lunacy, and we've now got a situation in Sydney, and I'd like to know what the Reserve Bank's going to do when it works out CPI. New South Wales government's stopping its toll support, its toll credit and givebacks going forward. So all of a sudden, people who are getting hundreds and hundreds of dollars of toll rebates aren't going to get them. Now, how's that going to be picked up in the cost of living and the CPI? Businesses who might have been getting toll rebates are going to have to put it into their cost of goods. I mean, Australia, and this goes right across government, we've got to stop putting up charges on an index basis and start driving down the cost of living in this country down. Drive it down. Don't increase it all the bloody time.
The one area where they are dead set against indexing is on the $3 million in super, above which you get a capital gain on unrealized gains. But anyway, we'll leave that aside. You mentioned tariffs. In the last few days, it's been copper that's been in the headlines, 50% on copper, similar to aluminium and steel. We're not a huge exporter of copper to the United States. It's a very small part of our exports. And I mean, Australia is only about 8th in the world in terms of copper production. The big producer of copper is Chile, and they're going to cop it in the neck. But pharmaceuticals...
But Paul, are they going to cop it in the neck? I mean, where are they going to get the copper from? Are suddenly copper mines going to open up in America? Maybe they are, I don't know. It's the cost of doing business in America, the cost of producing, and copper's a pretty essential metal.
It is.
The American corporate sector and the consumer's going to pay. I mean, I think Trump, this continuous trumpeting that these countries are going to pay, I mean, he's deluded when you're talking about components of the cost of manufacturing. It is pure delusion. He's talking rubbish. And I think we're going to get used to accepting, and I'm getting up to about 80% of what he says is nonsense. Don't just listen to it. And I think the markets are there, Paul. We're watching the share market, as you said in your opening remarks, pushing higher. I just think the true providers of capital, the true investors, are just going, look, let's worry about Trump when he actually lands on a decision. And then when he lands on a decision, Paul, we're going to say, well, how long is this guy going to be around enforcing this decision? And I know it's an issue for Australia. We still haven't had a meeting, and I think we're putting our foot down on pharmaceuticals, as we should. Look, the Trump era will pass. He'll be replaced. He might be replaced by another Trump, but how much longer can this go on for? And I think the world economy is coming to the conclusion, the more that Trump upsets world trade, the more it's going to start drifting towards Asia, and the next biggest economies, China and India. And he's trying to stop us joining BRICS. Well, I think he better start producing some numbers and showing that his economic management is actually achieving something, but that's not occurring at present.
You mentioned pharmaceuticals. That's a big deal for Australia. We are big pharmaceutical exporters to the United States, and CSL is one of our 10 biggest companies listed on the share market. It's very, very significant.
Well, look, shoot me down, but I'm sure we could find other markets. I mean, let's go back to what happened during COVID when we had a crack at China and they cut off meat and everything other than iron ore and LNG. Everything else was chopped and Barley was one, and wine. We found other markets pretty quickly, and I would have thought those markets were harder to find than the markets for pharmaceuticals in a growing world with 8.5 billion people in it. So again, it might affect one company or two companies. Are they disposables or are they essentials? I'm sure we can find other markets for pharmaceuticals, and we should not panic.
John, I want to come back to, I mentioned copper. Copper is often regarded as a kind of a forecast of industrial manufacturing activity and so on. It's called Dr. Copper for that reason. The copper price has shot up to an all-time record high. Part of that is because Trump is threatening a 50% tariff on copper imports. But there may be other factors behind copper. And once, the gold price has moved up, copper price is moving up, do you think that we're heading into a positive commodity cycle which could really, benefit the entire Australian economy?
Well,
Is that your view? So I know it's a hard call, but
why would the world slow down? You've still got the fastest growing economy with a large population being India, and India is a quarter the size of China with as many people. So the impact of China on world growth over the last 25 years has been astronomical. The impact of India with a slowing growing China, the impact's going to be as significant. So the world's going to grow. The Western world's going to have a significant focus on manufacture of defence goods, whether they're manufactured in America or somewhere else or in Europe. But that's going to be a focus. We've seen massive increases in the intention to invest or spend percentages of GDP.
So and demand for commodities like steel and rare metals and so on.
And Trump better watch himself. It might be great having the best defence products or arms in the world, but if you price them out of the market because of stupid policies like whacking on the price of copper on import, I'm sure a lot of this stuff will fly by and be forgotten in the future. I really do see a lot of these comments by Trump as being playing dumb and trying to get attention, trying to get someone to the negotiating table, and he's struggling. We know he's only signed 2 or 3 deals. Now he's sending out letters and saying, well, this is the deal. And I think he's running the risk that the BRICS back up. He's certainly putting Australia in the corner, and I see some reticence by Australia to negotiate, as we shouldn't. And Europe's saying, no, we'll buy your arms, but leave us alone. It's not going very well at present for what he's trying to do.
Well, we should point out that he got the big, beautiful bill through, which is a signature achievement. Whether it's good or bad for America, I'm not quite sure. I think
it might be good, Paul. It might eventually stabilise their debt, but in the meantime, it's going to push their debt up and increase their deficits.
Yeah.
The turnaround of the American manufacturing sector to start driving economic growth from a manufacturing base is going to take many, many years if it all happens. Yeah. Now, he may get a free kick, as what I'm saying in a thought piece, which we're releasing next week on Newswise and particularly on First Links, and we'll publish it next week below this video. But it's quite clear, and we've said it before, Paul, that America administration, the Trump administration, is going to try and take control of the Federal Reserve as part of its macro policy to drive down interest rates. It's going to print money to manage its debt. So a weakening US dollar is in the offering. So maybe manufacturing in America comes back when the US dollar goes back down to reality. Maybe that's the grand plan, the big vision. But at this point, it's chaos.
Is it fair to conclude then that US debt keeps on getting bigger? The Americans manipulate the bond market through quantitative easing. There's rearmament going on across the world because of the geopolitical situation. All of that, and there's a weakening US dollar. All of that is good for commodities. So I keep on coming back to, the structure of the ASX. We've got basically industrials, we've got financials, and we've got resources. And often you see money switching from financials into resources and vice versa. Are we going through a similar period where perhaps money's flowing out of expensive banks and going to start flowing back into the commodity space?
Well, you're talking about a change in momentum, and
Yeah,
if you can pick it's like, I guess, trying to pick the wind for a yacht and trying to change direction. I mean, what you say will logically happen at some point, but there's a lot of momentum in very few stocks in the Australian stock market, and we've done some
yeah.
analysis, which we'll report on next year. 82% of the ASX 200 return came from 8 stocks last year, and a third of that return came from CBA. And CBA's market cap went up last year by $90 billion, yet over 18 months, its earnings was about $1 billion better than expected. So about an 8% improvement in earnings led to a 50% increase in share price. Now that's ridiculous. And then we've got a stock like Pro Medicus, which is trading on, no one can tell me what it's trading on. I think it's 100 times revenue, but continues to rocket up and is well into the 30 billions of dollars of value. We've had a recovery in Newmont with the gold price, so nothing really it did. It just got a beneficiary. But very few stocks are performing over a long term in Australia, and long term and short term. Now, when does value come back into play? And it's hard to see. It's like if you switch out of these expensive stocks, yes, you are buying better value stocks, but stocks which aren't growing greatly. They're not actually exciting. Australia's
It creates
now.
a difficult question whether you want to buy Commonwealth Bank at a market cap of 300 billion, or perhaps you want to buy Nvidia, which just hit $4 trillion in market cap and is the largest company in the world now.
Yeah, but I think Nvidia earns more than 10 times what Commonwealth Bank earns, so you can probably justify it. But we're in a bit of a quandary in Australia. We've got too few stocks which are really growing. We've got too few stocks which are world class. Some of them have got question marks. We covered in the pharmaceuticals, but when we talked about something like CSL, it's got an issue in America, obviously, and it's one of our big cap stocks. So, you scan across the market. We've just had the kerfuffle with James Hardie. Whereabouts do you, in the top end of the market, where's the real value? Where's the stocks which are really growing? And it's not really apparent.
An overall market on a PE of 19.5 times future earnings, perhaps one has to look at the mid caps and really delve around some of the less prominent companies to find true value where you can get growth at a reasonable price.
Well, the question will be, and I think, another thing which I'm touching on in my article is the outflow of capital by active managers in America, so trying to get non-US dollar exposure if there is a risk that US dollar weakens. And I think that may be true of some American corporates, domestic American corporates who are sort of caught in a potentially an inflation trap, as tariffs go up and they're importing or their cost of doing business is going up. Will we start seeing some capital flow out of America, so passive investment capital and active sort of industrial capital, start finding its way to places like Australia? And you may see some mid-cap acquisitions by American companies, but there's not that many sectors which the Australian stock market is showing flashing green lights on at present. So we have dumbed down our stock market, and unfortunately we've dumbed down our economy to some extent. We're not dynamic. We're not at the forefront of IT, and Australia is so well positioned in Asia, but what are we doing about it? Are we attracting Asian capital here, for instance? And I know there's a big discussion going on with the Chinese.
Well, the last company that seemed to attract overseas attention was another resource company, Santos.
Yeah.
So that's what they're coming for.
That's right. And I think you might be onto something there, Paul. We might start seeing some international capital flow in to take positions or take over Australian mid caps, but they're, in the scheme of things, we're small. We're small. Yeah. We don't really have significant companies, and it is really disappointing because we're not really engaging. And we're at that door, I think, now with Australia and its engagement with Asia and particularly China and the pushback by America. We're being pushed to make some decisions here. Are we an Asian country or are we something else? And I
Yeah.
think we're an Australasian country, and we should start behaving like that, engaging with Asia more appropriately. And it's a big market to our north.
Yeah, I agree with you. John, that's all we've got time for today. Thank you very much, and we'll see everyone next week.
See you then.